Well, to discuss today's developments, we're joined by Maudi Lentsoane, the CEO of Lehumo Capital, on the line. Great to have you with us, Maudi. A global contraction of 3%, that's what the IMF is predicting, saying it could be worse than the 1930s. Just put this into historical context, how big this is.
Good evening, Francis. This is a catastrophe at the very least. We've never seen anything like this. We were there, some of us, during the financial crisis back in 2008, 2009. I can tell you it's nothing compared to what this is currently happening. It's unbelievable what just 3 months can really do. It was just 3 months ago when the IMF was expecting the global GDP to grow by 3.4% for 2020. They've revised that number. That's a swing of 6.3% between what they presented back in January and what they're currently presenting now. It goes to prove just how much this pandemic is having on the global GDP. It is a catastrophe, unfortunately.
Yeah. And it's incredible, like you say, and bad for South Africa. We were already lagging behind global growth. Does it make sense what the Reserve Bank is saying now, that we could see a contraction of around 6%?
It does, make sense. At this stage, Francis, these numbers that have been thrown around is just the estimates. And I can tell you a lot can still pretty much change. It's all dependent on what happens with this particular pandemic. How soon can and those that are, fighting it at the forefront are able to curb it and make sure that it doesn't spread quite aggressively. If we are able to find a vaccine, for example, those are some of the things, the unknowns that are creating a lot of uncertainty. So we could very well be talking these numbers and only to discover that either the numbers were worse or they were an underestimates. So there's a lot of uncertainty. There's still a lot of unknown. It all depends on how we are able to win this battle. If we can win this battle, within the second half of this year, this is what the IMF is basing their projections on. If you look at it, they say if we are able to fight it until in the second half of this year, we might see this negative growth of -3%. But if we struggle going into 2021, then it could even get worse than this.
Yeah, and what does say -6%, a 6% contraction in South Africa? What does that mean for markets, for you and me and the ordinary man on the street?
It's definitely going to be very bad. For the men on the street, it's going to be very bad for companies that are already struggling. It was a difficult period. South Africa came from a very weak, sluggish economic growth that we saw with high levels of debt. So we came from a very poor position, if you like, before this pandemic hit our shores. So with the -6%, it's certainly going to be a very difficult one. You're going to see that unemployment continue to jump even higher. You're going to see a lot of difficulties. The Treasury is not going to be able to raise enough in terms of taxes. A lot of people are going to be, they're going to lose their jobs. Companies are going to be, going insolvent. There's a lot of difficulties that we're going to face as a country if we were to really see that -6%.
So in light of everything that was said today about growth, was it the right thing for the Reserve Bank to cut interest rates? And is it doing enough? Will it make a difference when many people just can't earn at the moment at all?
I think our Reserve Bank has really acted quite swiftly. They've been very decisive. They've really done most of the things that needed to be done at the right time. With this virus and what we've just been monitoring with many other countries is that the speed is what's going to count the most. It's how fast can you really react and really come up with these measures to try and support your economies, whether it be the physical side or the monetary side or even the financial policies that needs to be implemented. So the Reserve Bank, I think, has done a great job. If you look at just in terms of comparing it with the rest of the emerging market central banks, I think the Reserve Bank is leading in terms of, being able to support, cut interest rates and intervene quite swiftly. So I think they've done a great job.
The rand fell afterwards because those interest rates make us a little less attractive to international investors. But otherwise, the market looks incredible today. The JSE up almost 4%. Is this all about the good stuff coming out of China?
No, I think it's got to do with partly the action of the Reserve Bank coming in and supporting some of those, cutting the interest rate. It has resulted in the rand weakening. You are seeing, I'm seeing across my screen, it's mainly the rand hedged counters that are really in the positives, the likes of the gold mining counters, the likes of Sibanye Gold, Harmony, and Implats and Goldfield. So those are the ones that are really in the green and profiting from the fact that the rand is weaker, and also the fact that gold price was also positive. China came up with some economic data which were weak, but less so than expected. And I think that also created a little bit of some positive news coming in this morning, and that's why we saw Asia trading positive. So I think there were a number of supports, even though there were some depressing depressing news that we saw from the IMF. But overall, we are going to see these sort of days where one day up and one day we are down.
Yeah, for today, just for today, we're up. Thank you very much, Maudi Lentsoane from Lehumo Capital. And I can tell you the rand is weaker by more than 8%, 18.35 to the dollar at the moment. But the JSE flying up nearly 4% today. And that was the bottom line. A look at the business news. Good night from me.